Taking a look at the markets, here's today's Money Metals Minute, brought to you by MoneyMetals.com. Geopolitical events that drove up previous metals prices in recent months are fading into the background. Fed policy taking front and center. Fed officials have threatened to hike rates for years now, but as often as they talk about hiking rates, they talk about lowering them too. It seems like at the same time sometimes. Janet Yellen's speech Friday from Jackson Hole, an example. She mentioned an improving economy and said the case for a rate hike is getting better, but then the rest of the speech focused on all the other tools the Fed is disposed to aggressively loosen an environment where rates are already near zero. And now here is a special report from Mike Gleason of Money Metals Exchange.
Well, the bad news for silver bulls is that the near-term trend has turned down. The good news is that the longer-term uptrend that commenced off the January bottom remains intact. Silver may have some strong support in the $18 to $18.50 area, and it just bounced confidently off that level. Silver and gold markets tend to be thinly traded in the late summer and are often more vulnerable to attacks by short sellers. An options expiration in the futures market is also playing a part in the recent correction, as many traders are deciding to exit their positions. Investors are also being distracted by nonstop election coverage in the media, including the so-called financial media. That makes it harder for investors to focus on what's actually going on in the real economy. As the news media inundate Americans with endless and all too predictable partisan analysis of every word that comes out of the campaigns, interest rate analysts are applying their own obsessive scrutiny of every word that comes out of Janet Yellen's mouth. The Fed chair just made her remarks at the Federal Reserve's annual Jackson Hole conference, and she took the opportunity to stress that the Fed will do just about whatever it takes to get positive nominal growth, even if it sparks higher inflation. There's virtually no chance of a rate hike before the election, but Fed watchers seem to think there is an even chance of a rate hike in December. But the truth is that it's too early to gauge. And it's quite possible that post-election turmoil on financial markets could mean the Fed's next move is to cut interest rates and even move toward negative interest rates. In the meantime, the Hillary Clinton campaign is hoping financial markets stay calm and elevated heading into November. Hillary is effectively running as an incumbent for a third Obama term. In the past 14 presidential elections that saw the S&P rally in the 3 months preceding Election Day, the incumbent political party emerged victorious 12 times, or 86% of the time. In other words, a buoyant stock market would give Hillary Clinton a huge advantage. And it just so happens that Hillary has allies in all the institutions that could potentially help keep the market propped up. She has received tens of millions of dollars in speaking fees from big Wall Street banks that have been implicated in market rigging schemes. She has the backing of some of the world's most powerful billionaires, including Warren Buffett and George Soros. Her campaign has received more than $125 million in donations from hedge funds. Meanwhile, they have given Donald Trump less than $1 million. Of course, Hillary also has allies in the Obama White House and the Democrat-run Treasury Department. But perhaps Hillary's most important backer of all is the Federal Reserve. The central bank doesn't appear on the list of official donors to her campaign, yet by repeatedly backing off on vows to raise rates, the Fed helped push the stock market up into record territory this summer. Yellen and company seem poised to set the table for rising stock values and a positive social mood to help carry Hillary to victory. This isn't to say that Donald Trump has no chance to win. He still has a potential path to victory. But Hillary has overwhelming institutional backing from the financial, political, and monetary establishments, plus near uniform support from the mainstream media. In previous years, no opposition candidate would stand a chance against such an establishment juggernaut. Donald Trump and even Libertarian Gary Johnson might stand a chance this year only because of the internet and the rise of alternative media. In a campaign speech this past Thursday, Hillary Clinton even called out some of the voices in the alternative media and alternative right by name. What does she want to do? Censor them? She'd seemingly like to transport American politics back to the 1990s, when establishment media outlets still had a near total lock on information flow to the public, and alternative voices were relegated to the medium of talk radio. But the internet is here to stay, and the flowering of alternative viewpoints when it comes to politics, economics, and sound money will continue to grow regardless of who wins this November.
And that was Mike Gleason at moneymetals.com. Live prices at moneymetals.com show gold currently trading at $1,320.90 per ounce. Silver comes in at $18.68.